Welcome back to this video. Today we're going to be talking about support and resistance lines. Much like the last video with the Fibonacci's, I've not done any pre-planning. We're just going to take a run through the charts and see what we can come up with. We'll draw a few support and resistance lines up in the charts and we'll show you how to trade from them. Now, just a little chat about them. Now, support and resistance lines they're a very powerful tool to have in your arsenal. Support and resistance lines, SR lines, can be found in all time frames, and you can go back in the chart history for months, even years. As far as the charts can go back, you can go back and utilize these levels. What is it? They are levels in history where there was a significant price change, which is signified by a reversal, and they can be identified by drawing a horizontal line at the very tip of a price reversal, usually at the tops and bottoms of trends, but they will also occur in smaller time frames where the intermediate trends are happening. I'm comparing daily charts to hourly charts here, for instance. Identify the difference between the two. Support can be viewed as a shelf where the price action has support and finds it hard to fall through. Resistance can be viewed as a roof where the price action finds it hard to break through. Okay, this is simple but clear explanation. To have confirmed support or resistance lines, the price should have reacted to this SR line before the chart in history. Once you have identified a support and resistance line, watch out very close to this level. You have a high probability of a reversal in this area. Tie this in with other factors like candlestick formations, Fibonacci levels, Bollinger Bands, turning stochastics. This can all lead to a very confident trade. How it works is quite funny. It's like a self-fulfilling prophecy, much like the Fibonacci's. So many people use them in many aspects of trading. These are used as take profit levels, stop loss levels, scalping areas, reversal areas, breakout levels, and many more. The fact is there is a lot of activity happening at these levels, but basically it comes down to who wins the tackle, the bulls or the bears. Okay, let's get some charts. Okay, so first thing you want to do is zoom out, go into your higher time frame and pick out your most obvious points. You want to select your horizontal line there. Okay, pick your tops and bottoms of moves. Doesn't matter, just there. You know, you've got a treble top there. Try and balance that one out, so 1, 2, 3 points on there, just touch through. Got another one here. Now, might not react to it anytime soon, but one day in the future I can bet you price will react off of there again. But you want to go to the closest support and resistance lines most relevant to you at that time. But it's always important, go to the weekly chart, find out what's going on in this intermediate area. So I was drawing it off of this low, off of this low here. Okay, you got one from the high there, you got one from the high here, which also turned out to be a nice little double top there before the price crashed down considerably for a few weeks. Okay, so you just want to do the ones closest to you. Go to a lower time frame, so that was a weekly. Now I'm on the daily charts. Zoom in a little bit, get the closest ones to me here. So it seems to be a bit more accurate. So the support here, support here, support here, support here. Hasn't quite made it there yet. Might continue up, might come down, retest this. but if you go back in time, you can see it was resistance. Okay, so resistance becomes support. When I was telling you about resistance being a roof and support being a shelf, so in this case, this SR line is acting as a shelf support for this price action here. And let's find one coming down the other way. I'll draw one on the low. Now it's came back up. This is resistance. It's acting as a roof where the price finds it hard to break through this level. Okay, so support and resistance. And we're also going to be talking about change of polarity. What becomes support becomes resistance. Okay, so you can see how the price acted as support here and acted as resistance here. Now when you notice a change of polarity, that's a very, very powerful signal to either buy or sell. It should be done with your trade recommendations in place, but it's always a good level to trade from. Keep your eye out for it. Just draw some more in here right off the bottom of this. You can see here one support, now resistance, caught in a little range. Price broke through there. See that. Now somebody really pushed the price up here, wanting to test that. Now the price gradually floated back down. What you will see a lot of the time is you'll get a false break, or a spring it's sometimes called, or a bully candle. There'll be one candle rush up through the price, and then straight away in the next hour there'll be a price crash back down, and the price will continue down. But what the people are trying to do here, when I say the people, I'm talking about the financial institutions, the big bankers and whatnot. They know people have got stop losses just above this area, just above these highs. You know, when you see the price coming up, they know they're going to be placing short trades and just placing a stop loss just 5 pips above this high here. They know this. They bully people out of it. That's why it's sometimes called a bully candle, because when they push the price up, it takes out a hell of a lot of stop losses, and then when they bring the price back down, by taking people out of the market, they're putting things automatically in their favour, because they've taken the long traders out of the market, and the price comes back down, and then people start entering. So there's a lot of reaction on these areas. It's always good to have a slightly wider stop loss, but in the same respect it's good to have a tight stop loss at the same time. There's no right balance in what's the right thing, but double top right here, came back, tested it. Now there's that little spike through that we're talking about. I'll move that through to a 1 hour chart. This is a 4 hour chart just now. Excuse me. Where did that go? My. There you go. So from that previous resistance level there, price came up. People are going to be short in the market because it's giving signs of it changing here. Got a nice engulfing bearish candle there. Price comes up, puts up a little spike. This might have even been a news event, nobody knows, but the price came up, shot through there, probably took out everybody's stop losses from the previous, and now the market just tanks it straight down. Okay, but they don't have to be just tops and bottoms of the actual trends. You can find the intermediate ones, which this high, that reacted. These lows in here. Okay, go down to your 1 hour chart. There's going to be all sorts of levels here. You put them in there. Okay, even these right here, ABC formations, even these little guys in here can act as support and resistance, so put them in, all these levels. They might not be as key as the big dramatic ones, but they still are key, and I bet you one day there will be a excuse me, a reaction on those price levels. It's very simple to draw them, okay? They're not always exact. The price might go through them by a few pips, but that's okay, because if the price comes back through, it's all good and it's still valid. Okay, so with all those lines drawn in, we can come along, look in the future. You know, these lines were drawn back in the past. You can see price reactions here, here, nice spike off there, here, not so much there. You can see the price is trying to break through. Nice bully, look at that. There was this line drawn in from God knows when, way back, quite a good few days ago, weeks ago, who knows. But there was a nice signal there. Price came up, just touched it by a few pips, came crashing back down. Everyone's like, ah, brilliant, start shorting the market. Some big guys come in, think, okay, we're going to make some money here, push the market right up, take out everybody's stop loss, bring the price back down, bully. Okay, price came along, nice little entry there, price comes crashing down till it finds some relevant support. This case it went there. I'm gonna change this one right now. I'm gonna change it to a green one, then I'm gonna go and find this level where it reacted from. Okay, so that was the point it changed. Let's go find a key level. Look at that. See that? See how these levels really come into play. Oops. Really come into excuse me, man. These levels really come into play from the past and into the future. I'm going to correct that because I think I spotted something. So that's what we've seen earlier. I just missed that one, unfortunately. Yeah. But these levels come about all the time, you know. So draw all your lines in, all your tops, all your bottoms, and just wait for them in the future. Every time the price on your new chart starts making new highs, new lows, start putting your new levels in. Okay, so if you were short in there, this is your next profit target area, this low right there. Go into the smaller time frames, examine this area, drawing the high there. As you can see, the price broke through it just now. Find out what else is in between this level. Okay, there's little one there. I'll put that one in. I think the price is there right now. In fact, I'll balance it out just between this high and this high. Check it out, little one in there, little move there, little move there, price reaction there. Okay, so now you know how to draw a support and resistance level. You know about polarity. What was resistance now becomes support, and what becomes support now becomes resistance. Okay, so it works for both sides. Same line, traded on different manners, depending on which side it is. If the price comes back down to the support level, you're looking to buy, and when the price comes up to a resistance level, you're looking to sell. Okay, unless it breaks through, then you know the price will probably continue to the next support and resistance level, because that's what the market does. Just bounces about between these support and resistance levels. It probably is one of the most commonly traded tools out there. Support and resistance levels are more dominant than the Fibonacci level. So if you've got a price coming down and it makes a signal of support and resistance level just before a Fibonacci, take it, because the support is a lot more dominant than a Fibonacci support. Okay. So now you know how to draw them. Get out there, start trading them yourself. You could probably actually just trade solely on support and resistance line. Don't even need a system. Just come about here and just wait for these key levels. You know, the opportunities come about all the time, so you can easily snatch some pips out of the market. Just wait for the price reactions, wait for a candlestick formation from them. Okay. But obviously we like to put a lot more probability in our favour. Once we have stochastics, RSIs, and Bollinger Bands, moving averages, Fibonacci's, confluence, and if it all ties in with a support and resistance level, then it makes a good trade. I mentioned earlier something about a 5-point trade. If you can have 5 things coming into play all at the one time, candlestick formation, stochastic, RSI, all such things like that. If you have 5 things coming into play, then it's definitely a good time to make a trade. Whatever those 5 points are, all depends on your trading system and yourself. And but yeah, support and resistance are definitely going to be on that checklist somewhere, and it's a very, very prominent tool. So don't take this one lightly. Every chart should have your support and resistance levels mapped out on them, most current trends, and do it on a daily basis, and just wait for those price reversals on them, and make your trades according to your system, and go make some money from it. And I'll see you in the next video.